All good.
Excellent. Thanks, Stephen, and thank you everyone for attending today's session. We spend a significant amount of our time talking to the owners of accounting practices, and we know now is an extremely busy time for everyone, as it has been, I think, through most of 2020. So we do appreciate that you've taken the time out of your day to jump into this session. So look, as Stephen said, Daniel and I are the co-owners of DMY. We're Australia's leading M&A specialist broker working in the accounting sector. So the one thing we do is that we help owners of accounting firms successfully sell and exit from their practice. We only represent sellers. I know there's some firms in the market that will represent sellers or buyers in transactions. We made the decision some time ago that we only wanted to work on the sell side, and we think that helps sort of maintain integrity in the marketplace and not give rise to potential conflicts of interest. So sellers are our clients, but obviously we'll be delighted. I'm sure there'll be a mix of sellers and buyers on the call today, and delighted to field questions from both sides of the fence. So DMY has been operating for 6 years. We're headquartered in Melbourne, but we operate across Queensland, New South Wales, Victoria, South Australia, Western Australia. In fact, we've got clients pretty much in all of those states at the moment, despite the travel challenges of COVID, which I'm sure we'll touch on a little bit later. My background briefly, I'm a qualified accountant from the UK, was a former partner at PwC, then switched across to spending time running corporates, including a number of jobs like Coles Insurance, OMPS, and roles at Wesfarmers. Before starting, I guess, more my own entrepreneurial journey and starting up a couple of businesses and getting involved in DMY with Daniel. And Daniel spent 20 years operating in the accounting industry and more than 10 years working for the likes of Xero and MYOB. So between the two of us, we feel we've got quite a good complementary set of skills and experience that we bring to bear to support owners of accounting practices, as I say, who want to successfully sell and exit.
Great, thanks, Mark.
Yeah.
So Daniel, how do you think accounting firms have operated during COVID? You know, what's the sort of what impact on accounting firms has COVID actually had?
Oh, well, I think to start off with the direct answer, they've been as busy as ever. I think listening to owners, both on the sell and the buy side, and just talking to, they're all saying the same thing. And what's become realised is the accounting industry has been the centre point of focus between the government's ideas, concepts, and release of stimulus packages to individuals and businesses needing to get that passed through was the accounting industry. So they've become so heavily dependent upon more than ever. In fact, some even argue this has probably been the most busiest tax season they've ever faced, because you've got this layer of complexity that got introduced due to the COVID-19 impact, plus all the other normal things that an accounting firm would be doing, just added another layer of complexity on top of what they would have been doing this year. So it's been extraordinarily busy for accounting firm owners, but also it's been interesting to see the different approaches that accounting firms have taken to supporting their clients through it. You know, with the JobKeeper to the stimulus packages of grants and other things, how the accounting firm has, there's been different ways of approaching it, from supporting the client directly, hand-holding the client through it, to explaining to the client how to do it and relying on them to do it, to a bit of both. And charging the client has varied depending on the the ability for the client to be able to pay, or sort of second, like getting the money from the government, then giving a bit of that to the accounting firm as their fee. And it's been quite difficult for accounting firms being in that predicament, because they are doing the work for the clients, but they do know that the clients are under stress and pressure and other things. So yeah, you know, it's been fascinating to listen to what they've been telling us, and even right now, I mean, they're even still extraordinarily busy. It's incredible.
Yeah, we speak to a lot of accountants, and that's exactly the feedback that we've had there. A lot of accounting firms actually run off their feet during this period of time, and it probably hasn't been a bad period for a lot of firms. So what does that mean in terms of buyers? I'll give that question to you, Mark. So in terms of buyers out there, what's that actually mean?
Yeah, it's a good question. So it's interesting. I mean, just briefly, back in sort of March and April, when I think COVID sort of really took off here in Australia, everything went very quiet in the M&A space, and we could hardly get hold of either anyone, you know, owners of accounting firms, whether they were looking to sell or buy, because they were literally so deep in what does all this mean. I need to focus on my, you know, it's a client moment of truth, as Daniel said. But what we've really seen over the last 6 months since actually is, if anything, we've probably seen more buyers over that period than we have previously. And I mean, just to throw out a few numbers, I think if we'd been running this session 12 months ago, we'd have been talking about an average of 15 to 20 plus buyers for every sales listing in a metropolitan location. You know, so we kind of, you know, 80-20 rule, Sydney, Melbourne, Brisbane, 15 to 20 buyers for every listing. What we've seen over the last 6 months is more than 40 on average. And depending on the size, you know, obviously the larger the firm, the less the number of buyers. But, you know, we've had small practices of $500,000 or less where we've had, you know, 80 plus or even up to 100 interested buyers, which has created a really interesting dynamic in the market, because obviously only one of those can be successful, which means there's then 79 who are interested in acquiring that then need to move on to the next opportunity. So, you know, the simple message there is there's far more buyers in the market at the moment than there are sellers. And I think the other interesting point I'd make with that is that we're seeing different types of buyers as well. So obviously there's accounting firms looking to buy accounting firms. We've also seen an increase, I think, over the last 12 months of financial planning firms looking to acquire accounting practices to, you know, I think both to, you know, as a defensive play in some ways against, you know, the sort of shrinking values of their own practices, obviously for that cross-sell opportunity and to diversify their revenue stream. So that's been interesting. And we've also probably seen more interest from overseas in the last 12 months as well, of firms looking to invest into Australian accounting practices, because they see the industry here is very solid, resilient, reliable, and on the whole profitable. So it's a good time if you're a seller, and it's a competitive time if you're a buyer.
So Daniel, what given the number of buyers that are actually in the marketplace at the moment, and it seems like there's a lot from what you were saying, and also from different avenues like financial planning. What's that had an impact in terms of valuations of firms?
Yeah, it's been interesting, because when we, like, just to come back to what Mark said about March, April, we did start receiving some phone calls from some particular buyers, and the sentiment that these particular buyers had was, oh, the accounting firm value, surely it must have dropped, you know, the global pandemic, and, you know, surely now they must be only worth, you know, 50 or 60 cents in the dollar. And speaking to those people, I questioned them as to why. And there was no, I mean, the only sense in the reason why was because there was this global pandemic. COVID-19 had struck the world and brought us all to our knees in terms of what we needed to do. but that was all. So we couldn't really say yes or no, other than we haven't seen any change. There's been no change in value. There's been nothing other to the thought. And the other sentiment that we started to hear is, oh, surely, there must be the typical retention of 12 months to ensure what I spend in day one is still there in 12 months' time. Surely that's got to be now 3 or 4 years. It's got to be a lot longer now, because there's just so much uncertainty in what's out there and what's happening with the clients of the accounting firm. And we called it out and said, look, that's a fair thought. I mean, we haven't seen that take place in the market, and we can't answer that other than what we already know, and that was before COVID-19 struck. Fast forward to where we are today, and it's arguable that the accounting firm industry has probably grown, and probably the value has possibly grown, due to a couple of elements. I think the first one you've just heard about Mark talking about, with the number of buyers, meaning it puts the seller in an ideal situation. But then the competition isn't just within the accounting industry, it's also within the financial planning sector as well. So if you take that consideration into thought, the financial planning sector used to have as high as 9 times recurring revenue paid to them. Now it's barely 2. It's sometimes even arguably if it's worth 2 times. So it's had a dramatic drop, and we all can all appreciate why, and we all know why through the media and what we've seen. But at the end of the day, that segment of the industry coming into the accounting is for 2 real key critical reasons. It's to protect the asset of their business and getting involved in the accounting industry, which is quite stable, and also to be able to expand the financial planning services network through the accounting industry. So you take that into consideration. You take into consideration what they've been palatable, even at today's standards of paying around 1.5 to 2 times revenue. And then looking at the accounting industry, which is arguably sitting at a minimum $1 in the dollar, this competition is driving up the value. And then if you overlay that with what I said before on the accounting industry has become so dependent upon, not just from the small business sector, but from also the government. It's shown the true strength of the industry and what it can actually do, and notwithstanding the fact how resilient it is in good times and bad. So, we've seen transactions in the last 3 months range from minimum $1 in the dollar to high as $1.20 in the dollar. And there's conversations even going on as we speak right now of $2.50 in the dollar, but that's on an EBIT multiple and a much bigger practice. So the value of the accounting firm, when I come back to what I said at the start, where it was speculative on whether it was actually going to drop due to the global pandemic, to fast forward to today, it's holding strong. And the logical reason behind it is because a client is still a client of the firm. It is debatable what would happen with the client base of the accounting firm due to the global pandemic and what industries are heavily impacted by that. So the only changes we've really seen has been around the buyers becoming a little bit more interested in the industry verticals that the accounting practice has. But I've still got to say that the medium sales that we've seen have been the 12-month retention period that hasn't increased in all the contracts we've seen signed to date. So, and again, that relates to just the competitive environment that buyers are in. It's unfortunate that they don't have the logical luxury of extending that retention period. Although I should add, we've got one deal going on as we speak at the moment where it was originally agreed to be 12 months, but it has been extended through the buyer's finding of their own due diligence, but it had a logical reason why. And that's only one out of all the transactions we've done since March, April to date.
So you're saying, you made a comment about not too much has changed, but have practitioners out there, maybe smaller firms, have they, are you finding that people are coming to you and saying, look, COVID's given me a bit of a wake-up call in terms of what I want to do with my life. and I probably just don't want to go through, another, 5 or 6 years of tax time. Have you found that there's been a bit of an increase in activity because of that?
I think the honest answer is we haven't seen it yet because they're all too busy. I mean, we've got a very healthy pipeline of accounting firms to sign up with us next year. And Mark and I have been having some conversations with them. But the real honest truth is they were already going to be selling, and they still do want to sell, but they don't have the time to send us the information that we require. They don't have the time to see buyers that they need to see. It's time poor, right? It's even more time poor because of everything that's going on. So we haven't seen a massive flood of people coming to us because of what's happened. I think in some cases it's done one of two things. It's probably pushed the individual that was already thinking about doing the retirement to do it, or it's delayed them until the end of the financial year next year because they want to fix up a few things that happened during this pandemic and get and actually see, the individual that owns the practice might be going, oh, maybe there is a few clients that I have lost. I want to find out if that's the case. Which, Mark, to that point, Mark and I always say, whether they're there or not, we always see accounting firms win clients and lose clients, regardless of the pandemic. And if anything, I think as a final round comment, we've seen a lot of accounting firms grow through this pandemic, not shrink.
Interesting. And given that, Daniel, you've sort of given a good segue into Mark for a question for you now, Mark. In terms of transactional terms, Daniel spoke a little bit about retentions not really changing. Is there anything else that you're seeing at the moment in any of the deals that you're doing that where maybe some of those transactional terms have changed, or there are additional sort of terms that have been put in, or what does a traditional transaction actually look like?
Yeah, it's a good question. I mean, just to round off on the retention piece, I think, again, pre-COVID standard retention would have been sort of, anywhere in that 10 to 20% range in 12 months. When COVID started, buyers were all telling us, retentions will shift to 2 years and a much higher percentage. I think, as Daniel said, we haven't seen that. But I think the key to that we always encourage with sellers is and buyers is to, wherever you think the retention needs to land, base that on facts and actually have a logic-based conversation rather than sort of, the vendor picks a low number, the buyer picks a high number, and then you sort of just butt heads and try and meet in the middle. It's not really the right way to do it. It's, you've really got to drill into the client portfolio and look at that. So, looking, I mean, in terms of other commercial terms, I mean, really, the key things are obviously what's the headline sale price, what's the retention period, the period that the vendor is going to stay on board, is an interesting one. It hasn't necessarily changed as a result of COVID, but I think generally the shift over the last few years that we've seen is that there's a far greater variety of reasons why vendors are looking to sell, and the sell and the exit aren't always seen as necessarily being at the same point in time. So, we have had that sort of traditional, people want to retire and, they want to do an orderly transition and then leave. But we've had other people go, well, particularly if you might be in, say, a two-partner firm where one's older than the other and the younger one's going, well, I'm happy to sell, but, I want to keep working for 3 years, 5 years. We've had examples of people even saying, I want to work up to 10 years. So that sort of conversation around what does the vendor's remuneration look like post-sale is an interesting one. And we always encourage the vendor to go into that conversation around don't lead in with a dollar number. You might have a dollar number in the back of your head that you're looking to secure in terms of your remuneration. But, go in focused on what role do you see that you will deliver that will offer the greatest value to the business. And then if you agree with that with the buyer, then it's a lot easier then for the dollar value that equates to fall out of that conversation. And I'd say probably the other aspect where we probably have seen a big change over the last 6 months is probably buyers just being extra diligent, if I can use that, in terms of their own due diligence. So it's not like sort of pre-COVID, buyers weren't doing due diligence. And the reality is, if you line up 10 buyers, there'll be different degrees of DD that they'll do anyway. But I think as a general rule, buyers are now spending more time, interrogating the book. And I've got my sidekick here. You can possibly hear barking in the background. I'll ignore that.
Agreeing with you, Mark.
But yeah, I think buyers are just going to that extra step at the moment in terms of their due diligence and really, unpacking and diving deep into the individual clients for the vendors, just to make sure, that there aren't any sort of red flags in there in terms, particularly if you've got a client that, in an industry, particularly that, whether it's leisure or retail or travel, for example, and, wanting to understand those probably to a greater degree than they would have done normally. But other than that, the rest of it's largely the same.
Okay, yeah, that's interesting. So we're hitting close to time. So there's just a couple more questions which I'm going to ask you. We're getting pretty close to the end of the year, and it's been a very long year for a lot of us. And I think a lot of us will be happy to see 2020 over and done with. But if you're interested in selling your practice at the moment, is it too late now? You just wait until maybe February when everything comes back, or what's your advice in relation to timing of sale? I'll ask that to you, Danny. How's that?
Yeah, okay. 4 weeks until the end of the year, really. I mean, there's like the critical stages to get through when selling your practice is understanding the why. So we're really keen on understanding that. Then it's preparing the information, and that's us working with the firm that's selling to get the information required to produce our information memorandums to send to potential buyers. It's a decent list, and we feel this time of year, and with 4 weeks left into it, it's probably better, we say to people, to get engaged with the idea before Christmas and then use the Christmas and New Year downtime, fingers crossed, to get the information prepared, gathered and sent to us so that, we've got that time in January to finalise it all, get it right, get a mutual understanding of the value and that the information memorandums are ready to go, and then pull the trigger in late January so that as the market's coming back together and, we're kicking into what should be a normal year next year, with the vaccine coming out again, fingers crossed, you get that nice run into the magical date that we always sometimes find people working towards, which is the end of the financial year. So, in a nutshell, you can sell a business, you can sell a accounting firm at any stage throughout the year. But we always say to people, both buyers and sellers, just be mindful of the seasonality of the industry, and we all know the first 6 months, normal industry the financial year is quite busy, and the last 6 months is busy, but probably not as busy, if that makes sense. We don't know what early next year is going to look like. We hope it's going to be a little quieter, but using time wisely is the key. So, and I mean, look, in saying that too, the whole thing from a buyer and seller's point of view is, getting prepared, but then giving enough time so that you can, start seeing people with a good run, like trying to see someone now, then having a 2-3 week break and then coming back to it. And then it's a holiday sort of environment, so you forget and you sort of relax. You have to start again. So we don't list any new firms coming into the end of the year now, because it's fraught with danger in them saying someone and then,
Yep.
the stopgap, right? So you don't want that, because the key to the whole thing, if you sort of looked at like what's the core to make any of these things work, is a buyer and a seller culturally get along. You can define culture different to what I can define culture, but if we both define it the same way and we think similar, we've got a match. That's ultimately what we're about. We're trying to see, what the buyer's saying as much as what the seller's saying, and appreciating both. Because as Mark said, we only represent the sellers, but we're very empathetic to the buyers, because we know one day they too will probably be our client. So we're very respectful to all parties.
Yes, very smart. In terms of the life cycle of a sale, how many is it sort of as a rule of thumb, how many months it might take to get a sale over the line and settled?
Yeah,
Yeah.
I'll answer that one. I mean, short answer, no. I mean, if you take the outliers, we've had practices that have, sold in less than 3 months, and practices that have taken, 18 months to sell. But, they are the outliers. I mean, the most common, we generally, and I should say, it will also vary between, metro versus regional as well. But if you look at the most common, if you've got a metropolitan practice, we generally say you've got a fair crack at selling through us, because of our, the range of buyers that we've got the ability to market to. Within a 6-month process, you should be, in a space where you've identified the preferred buyer, you've got your contract of sale in place. You may not have chosen to settle by that point, because sometimes the settlements can be extended, but for all intents and purposes, you've got a 70 to 80% chance that the deal will be done.
Okay. And Daniel, just I'll get a final comment from both yourself and Mark. But say from a seller's point of view, have you got any sort of key advice that you'd offer them as a final piece?
I think the two key things that I always say to sellers is understand the why, because the buyers will want to hear that too. So you've got to be ready to commit to the process is the other point. And they're kind of connected, because sometimes we find ourselves talking to owners of practices for 12 months. And to be honest, we don't mind that, because it gives us the journey with them. Does that make sense? So we sort of live the experience with them. So we know when the why becomes reality and the trigger gets pulled. And then, it's a commitment, and it's not, we try and make it as easy as we can, but there's only so much we can do. So the additional time constraint in the commitment, you do need to allow for, which is, yes, the initial, I call it the needle. It hurts once, but then you're immune after, which is getting all that information to prepare those reports, because they are vital, because that's what buyers need to understand. And buyers like to understand. And then the second thing is you got to think about the time you're going to allocate to meeting buyers and talking to them and understanding and appreciating them. And they too, the buyers should be trying to understand and appreciate the seller. So, these things do take a little bit of time. And it's okay to sometimes allow a little bit of time to go by, because you've had client emergencies take place and other things. And, buyers have the same thing happen to them, as do sellers. We're all in the same industry. So yeah, time and the why, you got to set aside some time to do it. You've got to do that and commit to the process, and know your why. Because if we believe it, we feel like we've got a good sense check on what the market feels, and the buyers will too. But if we don't quite understand it, we tend to say to the seller, just hold off until you really know what you, because people do talk to people, and people do read people's body language as much as they do their words. So we want them to be confident.
Yeah, thanks, mate.
Yeah.
And Mark, maybe any final points for a buyer out there? What maybe what they should be considering and looking for.
Yeah. So I mean, if I come back to the, you're most likely to be one of at least 40 looking at every opportunity. So I mean, first and foremost, I'll probably say be patient, and don't be downhearted if you miss out on the first opportunity, because it will take some time. There simply aren't enough good quality firms on the market to sell to meet the needs of the buyer. But how you can help yourself, I think, is be really clear on the type of firm you're looking to acquire, both in a strategic and a cultural sense. And when you see those opportunities, be ready to move. So it's never a first in best dress. You're not going to get the deal just because you're, the first one to submit an inquiry. But equally, if you sit on an IM for 2 weeks, the reality is the vendor might have started a first round of meetings by then, and you're out you're not on that list. And if they like someone in that first round, they might go straight to a heads of agreement. Yep. So move purposefully, I think, is probably the word I'd use. And then the other thing is, don't forget to, you really need to own and drive the process of making sure your financing is in good shape. We've seen deals at every stage, even up to, post-contract of sale, actually, fall over because the vendors thought their financing was in order. It turned out not to be. And the opportunity fell over, which is obviously frustrating for the vendor, but it's probably a hell of a lot more frustrating for the purchaser as well. So I think if you do all of those things, you got to give yourself the best shot. And yeah, you've just got to stay on top of it, and you can't, be proactive.
Okay, well, good advice. Any questions for the guys? Just use the Q&A chat function, and we'll ask them. We're getting very close to the end, but I'll just start off with just a quick question about. I'll put this to you, Daniel. How important is a staff to any sort of deal? Trying to keep the staff on board and their buy-in, and what's your advice in terms of doing that? When do they get involved in the process itself?
Yeah, it's tricky because initially the seller doesn't want the staff to become aware that what they're trying to achieve, but the buyer wants to know the staff. So there's a fine line between what's wrong and what's right there. We always come back to the common sense factor, right? So with regards to what we've seen in some cases the seller go to the key staff person, manager, senior accountant, because they are a key and fundamental staff member with regards to the relationships with the client. Because the buyers that we see coming through are always very keen to explore which of your staff also talks to the client. Because from a buyer's perspective, we see that if that staff member leaves, there's a risk that the clients might leave with the staff member. So to be able to, appreciate from a buyer's point of view that the seller's got a little constraint over them, in that as soon as they tell the staff, hey, look, I've got someone here I want you to meet. Oh, well, why do you want us to meet them? Oh, because I'm selling. Yeah, that's a big call for a seller to make, right? Because then the staff go, oh crap, does that mean I've still got a job? That's the first thing they say, naturally, because change is disruptive. But the buyer on the other side is going, I really want to get to know your staff, because the people that process the work, the people that deal with the clients, I need to know all that stuff. So typically what we say is, if there's a heads of agreement, at least there's got to be something that gives the seller comfort for them to be able to go to their staff with confidence and go, hey, look, I want you to meet this person because I found this person's great, this person gets along with me, I get along with them, great fit to the practice, I think you already like them, I'm looking to retire, like all those things that the seller would say in their own way to the staff member, to give them a level of comfort, and then have the person there to then bring in to talk to. That seller has to feel very confident that when they do that, there's still an element of risk on them doing it, but it's reduced because there's a deal there. There's something that's there. And then so if you think like that, then you can think like the buyer in that, okay, I got to give the seller confidence before I go and speak to those staff. But in another way, what we always see is that the buyers are always typically liking the staff to stay involved, because it's that initial 90-day transition period. Disruption can be, devastating or really good. You know what I mean? Like you can't go too hard and too aggressive with the staff, and the staff, if they all got up and left, there's a big hole in the processing engine, right? So the buyer's worried about that too, right? So a lot of empathy going on both sides.
Okay. Mark, did you see that question that came up?
Yes. Yeah. Question.
Could you maybe you could share it and answer that?
Yeah. So the question from David was: do you sell parts of practices, i.e., 4 partners and 1 exiting, so 25% available for sale, no one internally to buy? Great question, David. So the short answer is yes. I mean, we've seen that play out in a number of different ways. We actually had a scenario which may not be exactly the same as this, but we had a scenario of a firm recently that actually had 4 partners, 1 wanting to leave straight away, 1 wanting to leave in a couple of years, and 2 wanting to carry on for sort of 5+ years. And in that situation, the whole partnership was sold to a larger firm. And the trick with that one is it was probably the most complicated sale we've done, because each of the 4 partners had a different need and a different outcome they were looking to achieve. So, we had to work pretty hard to find a buyer that could accommodate all of that, but that was done. I mean, the more straightforward way to do that, presumably, is if the other 3 partners actually still want to stay intact as their standalone partnership and not merge into someone else. And yes, absolutely, the 25% could be sold to bring another person in. It's sort of those sort of situations. There's a blur, and we've had this conversation with search firms. A search firm would say, well, that's a recruitment exercise. We'd sort of go, well, it's actually a sale, because you're really looking for someone to buy into the business and potentially bring other fees as well. But short answer, yes.
I think to add to that also, Mark, is that we always see, 90 to, if not 95% of clients that we get, they've tried an internal management buyout already. So most, if not nearly all, have already tried it. And what we've found is the common denominator is that the internal management buyout is always less than what the market is. So if you sort of take that in consideration, some of the little traps we've seen is that there's a conversation with an internal buyout, like someone like in this example, 4-partner firm, one owns 25%, wanting to get out. They go to the key staff member. Sometimes they don't want to be open and honest and transparent about their financial situation, so the process drags out a long time because they don't want to say no, but they really probably do want to do it. And the other thing is then through that, what we see is the owner of the firm probably try and make something work by reducing the 25% value, which isn't really necessary. So to put it in perspective, we always say, go internal and go to market. Look at what companies do and businesses do all the time when they're looking for a new employee. They look within the business and they also look external to the business, because you just want to explore options and get a true retrospective value of your 25%. So it's always interesting, these conversations, but I think that's something that we're constantly seeing, haven't we, Mark, through all our dealings with owners, is that complexity between, do I do it internally and take a hit on my value, or do I go and look at externally to see what other options are out there and get a true market value of my 25% in this example?
Yeah, interesting. All right, well, I think we're just about at the end of the webinar. Guys, look, thank you very much, Mark and Daniel, for sharing your insights and knowledge into this particular area. You do have a an email that goes around, because I know I get it at least once a week. If people want to subscribe to that email, where do they go?
Yeah, if you go to our website, DMY ASSOC, so dmyasssoc.com.au, and you'll see there's a subscribe button icon there at the footer, and you literally just put your name and email address. It's actually, our newsletter typically goes out once a fortnight. So, and what we do in that is we have all our current listings and insights in terms of what's happening in the market. So it's we won't be harassing you on a too regular basis.
Yeah, no, so those that are interested in acquiring or selling, it's a really good place to start. Thank you everybody for taking the time to attend today. We do appreciate it. Our next session is on the 10th of December, and it's going to be on how to deal with landlords. And we've got David Brett from McKeon Park, who's done a lot of mediations with landlords during this period of time. And I suspect that there's a lot of businesses out there that are still negotiating with their landlords. So I welcome you to join us for that particular session. I think you'll get some insights about how you can assist your clients with those sorts of issues. Daniel, Mark, thanks once again, and thank you everybody for attending today.
Thank you. Yeah, thanks everyone
for having us.
Thank you.